So if we're thinking about exactly what we're trying to capitalize on when it comes to the wave angle, and let me get that Aussie chart back up because I think that is really what is at the heart of our decision here. Knowing what to avoid is key, because there are going to be times, more often than not, that you will have multiple setups occurring around the same time, again, due to the movement in the Dow and the dollar. So it's really important that you notice these nuances, because, again, the dollar Canada, the Euro US dollar, and the Aussie here all had, and again, in their face value assessment of the market cycle, they're all either at that upward 12 to 2, the way the dollar Canada was, or the downward 4 to 6, the way the Euro US dollar was, or even the 4 to 6 here on the Aussie. They're meeting the criteria for the market cycle, but as far as, again, the nuance, smoothness, respect for the wave, and established, they're all fairly established. Again, we talked how the Euro US dollar was the least established, but the two things that the Euro US dollar had going for it, and the same thing the dollar Canada had going for it on the 5-minute chart that the Aussie dollar does not have, is the smoothness. There's no smoothness here on the Aussie, and respect for the wave. There really wasn't a test of the wave on the Euro. There was in the Canada, and both the Canada and the Euro had that nice smooth wave. What this would do, this triage process, selecting, this would eliminate the Aussie. This is so important here, gang. Eliminating this chart is probably the most important decision you can make in order to make a decision about even which chart from here to pursue. If you are lax about this, gang, if you don't understand what I've just covered, this is where you're going to make bad trading decisions because you started with a bad trading setup. Ask yourself, is there clarity in the psychology? If the wave is bumpy, if the wave has wiggles, if the wave is not being respected by a price, there is no clarity. We are looking for that clarity. Smoothness is clarity. Being established is clarity. Respect for the support or resistance of the wave is clarity. Start there. And by the way, as far as clarity goes and reading the wave and the respect and that works for any time frame. This is not just specific to the 5-minute. I think it's super important for any trend following setup like a swing or this intraday swing on the 5-minute chart. But this is part of your market cycle assessment regardless of your entry. So this is, having the keen eye for understanding a healthy versus unhealthy wave is going to help you with all your trading, because now you're going to take that same criteria, smoothness, respect, established, and you're going to apply it to your Momo trading. You're going to apply it to your inside the range trading. You're going to apply it to any kind of wave angle reading you're going to take. This applies to all of it. I'm not just saying this is just a 5-minute, because it's absolutely not. This applies to all your analysis. Clarity, as it comes from the psychology of the market cycle, as we read it through the wave itself, is the key to everything we do. In fact, sometimes I kind of think to myself, when I look at what I'm trying to communicate to any audience that I'm speaking to, I'm really not trying to communicate entries, because I think there's lots of great entries taught by lots of great traders out there. I would be absolutely wrong to say there's one best way. My way is the best for me. Okay, these other traders, that way is the best for them. There's lots of great entry strategies out there. I think what I hope to communicate to all of you is, and besides this 5-minute setup we're talking about today, what I hope to communicate to all of you is this. Understand when to apply these great strategies. I don't care what your strategies are. I really don't. I think there's so many great ones out there. You probably have a few in your trading approach right now. But understanding when to apply certain indicators, understanding when to trend follow versus looking for trend reversals versus looking for momentum setups, understanding, number one, what your strategy is meant to capitalize on in terms of a market cycle, and then applying it at that right time. That is hopefully the message that I'm communicating every time I sit behind this microphone and talk to you all. That's the most important thing I can teach you. Not a strategy, but when to properly apply the strategy. Okay? So again, what I hope that you see here is when we looked, or triaged, that's the word I like to use because I'm sorting, I'm comparing. When we triaged the 5-minute chart of the euro, the 5-minute chart of the Canada, and this 5-minute chart of the Aussie, we eliminated the Aussie. And we came down to the euro versus the Canada. And by the way, you don't have to pick the euro or the Canada. I'm assuming, just out of what I've noticed from most traders, they would probably gravitate towards the euro. It is the most popular pair. Some traders don't like COM dolls. Some traders do. I don't know what you'd prefer, but they're both valid. You don't have to pick between the two. If you're comfortable with both, great. If you have to pick one or the other for either your focus, you're not ready to manage 2 very short-term intraday trades, that's fine. And if you're uncomfortable with one of the pairs, that's fine too. At that point, it's your personal preference, but they're both valid. The important point here is we eliminated the Aussie. All right. And by the way, these 3 charts and the description of the entries on these 3 charts from this week is the very article that I'll be posting either tonight or tomorrow. So if you head back to the ibfx.com Daily Trading Edge blog, this is a discussion that's going to be part of that article. Okay? So I'm stoked about that. It's going to be a great resource.